AMD recently announced their second quarter 2023 earnings results, and we can see that over the last year, AMD is up 16%, while the rest of the market is only up 8%. So AMD is outperforming the market over the last 12 months. And in this video, I'm going to look into some of the recent news that came out surrounding AMD. I'm going to look into their financial statements, and then I'm going to use a discounted cash flow model and figure out the weighted average cost of capital for AMD so we can know what the intrinsic value per share is for AMD's company. So right here we can see this article. It's titled AMD reports better than expected results even as PC market shows continued weakness. Some key points to touch on include the fact that AMD said revenue for the second quarter fell 18% from a year earlier, but results still topped analysts' estimates. And then on top of that, the client segment suffered a steep drop in the quarter due to overall weak demand for the PC market. Right here, they point out that for earnings, they reported 58 cents per share, which was better than the 57 cents per share that was expected by analysts. And then also for the revenue, they reported $5.36 billion of revenue compared to $5.31 billion, which is what analysts expected. For the third quarter, AMD said that they expect $5.7 billion of sales, which is less than what analysts expected of $5.81 billion. Unfortunately, their earnings dropped off a cliff. They reported net income of $27 million or 2 cents per share, which is down year over year from $447 million or 27 cents per share. So really bad earnings growth for AMD for the second quarter of 2023. Also, they point out that the processor business has slowed in recent quarters, reflecting a deep slump in the global PC market. AMD's total revenue dropped from $6.55 billion a year ago, making a second straight quarter of revenue declines. And then lastly, they point out that although business is down for AMD, they are currently making investments in their future, one of which is in artificial intelligence. They're one of the few companies making GPUs, high-end graphic processing units, needed for artificial intelligence like ChatGPT and other language models. And analysts are waiting to see if their server chips are going to take market share away from one of their top rivals, Intel, which recently reported sales and earnings that were higher than expected. So it'll be interesting to see where AMD goes from here. Obviously, the race is on between AMD, NVIDIA, and Intel to see which one of those three companies can end up providing the GPUs that are necessary to build out AI, which is what all of the big tech companies are currently investing in as well. And we'll see if AMD is able to steal market share away from Intel and NVIDIA. So right here, we can see these are their financial statements, their income statement right here. Total revenue declined year over year from $6.5 billion to $5.3 billion. That's a decline of 18% year over year. And unfortunately, that ended up resulting in the net income decline from $447 million to $27 million, down 94% year over year. So really poor year over year results for the second quarter for 2023 for AMD. Then we have our balance sheet right here. We can see that their balance sheet shows total assets are up from $67.5 billion to $67.9 billion. And they have $55 billion of total stockholders' equity. So most of their business is financed by equity. But unfortunately, they have an accumulated deficit as opposed to retained earnings of $243 million. So they don't really have much capital to redistribute back to shareholders or reinvest into company, especially because their earnings are so low. So hopefully they'll be able to turn a profit in the future and start accumulating some earnings so that they could use that to invest into their company, specifically into artificial intelligence. And so lastly, right here, we can see this is their cash flow statement comparing the first half of 2022 to 2023. Operating cash flow is down from $2 billion to $865 million. And they repurchased common stock of $240 million, which is down from $2.8 billion in 2022. So they're definitely not prioritizing returning value back to shareholders as much this year as they were last year. Right here, we can see the discounted cash flow model to figure out the intrinsic value per share for AMD. I'm using a pretty high optimistic growth rate of 83%, and I got that from this historic growth rate calculation here. In 2018, AMD had free cash flow of, or really not in 2018, but in 2019, I forgot to update this, sorry. But in 2019, they had free cash flow of $280 million. In their most recent full year, they had free cash flow of $3.12 billion. So that's an increase of over 4 years of compounded annual growth rate of 83.36%. So obviously, this is a pretty optimistic growth rate. I typically try not to use growth rates that are this bullish just because I prefer to value companies conservatively so that in the event that I'm wrong and the company is actually worth a lot more than I predicted, I end up reaping the benefit of that analysis. Whereas in this case, if I'm being extremely optimistic, assuming that AMD is going to grow at 83% for the next 5 years, and they end up growing at 40% or 20%, then I'm going to end up losing a lot of money in that case because I should have been more conservative with my valuation. To save the trouble, I'm just going to keep things simple and I'm going to stick to the 83% for the purposes of this video because these numbers do come straight from their financial statements. So if AMD is able to grow the next 5 years as much as they were the last 5 years, they will be growing at 83% compounded annually for the next 5 years. But that is a lot to ask for a company, so we'll see where it goes from here. But we can also see weighted average cost of capital estimation here is 12.76%. I got that from this little weighted average cost of capital calculation here. Book value of their equity is $54 billion. Of their liabilities is $12 billion. Their interest rate on their costs on their debt was about 3.52%. Their most recent full year's tax rate was negative 10%. They ended up actually having a benefit from their tax rate, which is why it's negative here. They are currently in the market. There's a 10-year treasury yield of 4.10%. AMD's beta is 1.82, so they're definitely a little bit more volatile than the rest of the stock market. Average stock market return is 10% per year. And so using these metrics, I calculated AMD's cost of equity. I added the risk-free return to AMD's beta and multiplied that by the average market return, subtracted the risk-free return, and that gave me 14.84% for their cost of equity. We can see that for their equity proportion here, it makes up 81% of their balance sheet, 19% for their debt proportion. So to calculate the weighted average cost of capital, I multiplied their equity proportion by the cost of equity, added that to the debt proportion, multiplied by the cost of debt, and then multiplied the debt proportion by the tax yield, which is 1 minus the tax rate. That gave me the weighted average cost of capital of 12.76% for all of AMD's capital, which is what I used right here to calculate the discount rate for this discounted cash flow model to discount the future free cash flows for AMD back to the present value of those cash flows. Terminal value 10, year 1 free cash flow is $3.12 billion. I'm getting that from their most recent full year. They have a net cash position on their balance sheet of $3.43 billion after subtracting their debt, and they currently have 1.6 billion shares outstanding. That puts their estimated intrinsic value per share at a really high value. Again, with these really optimistic growth rates, I tend to be careful with these, but for the purposes of this video, I'm going to use them. The estimated intrinsic value per share comes out to be $530 per share, which means that at the current share price, they would definitely be trading below intrinsic value per share, and they'll be trading at a very strong buying opportunity if they are able to grow at 83% each year for the next 5 years, same as they did for the last 5 years. If their free cash flows are able to grow by that amount, then they're definitely trading at a very good buying opportunity at the moment. Right here on the right-hand side, I did a competitor/industry analysis comparing them to two of their main competitors, NVIDIA and Intel. We can see that NVIDIA has the highest profit margins out of the 3 companies. AMD has the lowest, 36% gross profit margin, 5% net profit margin, and 3% return on assets. They also have the highest PE ratio right now, trading at 474 times earnings, and they're the only company out of the 3 that does not pay a dividend. So pretty much across the board, they are coming in last place in every single metric here: profit margin, PE ratio, and dividend yield. First place would probably go to NVIDIA just because they have the best, or actually in this case, first place would probably go to Intel. But Intel is currently not profitable as of their most recent full quarter or as of their year-to-date results. So difficult to say. You probably want to give it to NVIDIA just because their stock price is up the most this year and their company is boasting the best profit margins out of the 3 companies. Lastly, we can see I wanted to compare AMD to some of the other companies we've looked at. In terms of share price to intrinsic value, there's no surprise here. AMD ends up at the top of the list. They're currently trading at 22% of their estimated intrinsic value per share with a share price of $116 per share. That puts them in first place. But keep in mind, I don't think any of the other companies on this list had a growth rate that was as high as AMD's at 83%. So obviously, if you increase the growth rate estimation for a discounted cash flow model, then the intrinsic value metric is going to end up being a lot higher. So it could be inflated, but those are the actual growth rates for AMD's last 5 years. So if they're able to continue to grow at that rate, then this would be accurate. They would take first place, trading at 22% of their current intrinsic value per share. Besides them, Google, Albertsons, Alibaba, and Etsy are the only companies we've looked at that are trading below intrinsic value per share. Right here for growth rate, obviously no surprise, AMD in first place with their projected 83% growth rate. We can see that for profitability, AMD's profitability ratios were not impressive. They had a 36% gross profit margin, and they had a 5% net profit margin, which is not good enough to get onto either table. Adobe holds the number one spot for gross profit at 86%, and Oxy for net profit at 36%. We can see that for dividend yield, AMD doesn't pay a dividend, so they don't make it onto that table. One of their main competitors, however, Intel, comes in first place with a dividend of 5.52%. For year-over-year revenue and earnings growth, we can see that, or we saw earlier from their financial statements, that AMD had revenue decline of 18% and earnings decline of 94%. So not good enough to get them onto either table. Obviously, Tesla has the number one spot for 47% for second quarter year-over-year revenue growth. And one of AMD's main competitors here, Intel, has the highest position on our earnings table here. Second quarter year-over-year earnings growth of 400%. So very impressive. But bad news for AMD, obviously. And then lastly, right here, for stock performance, AMD is one of the highest on this list, coming in third place with a 512% return over the last 5 years. So that's definitely a very good return for shareholders over the last 5 years. It could obviously justify the large growth rate for their company, but we'll see if they're able to continue to grow at the same rate. Tesla holds the number one spot on this table with a 1,144% return over the last 5 years. So based on this, it looks like AMD is pretty competitive in terms of stock price, growth rate, and intrinsic value per share. But for profitability, year-over-year revenue and earnings growth, and dividend yield, they are not even good enough to make it onto those tables compared to the other companies we've looked at. Obviously, these companies are coming from different industries, so it's not really that fair of a comparison, but I still like to do this part of the analysis just so we could get a bird's eye view of the entire market. Right here, in terms of a competitor analysis, they're coming in last place. You'd probably want to give it to either NVIDIA and Intel because AMD has the lowest profit margins, highest PE ratio, and they don't pay a dividend. There are obviously more things to consider when you're comparing companies against each other in the same industry, but for the purposes of this analysis, I'm just going to use these metrics right here. And then based on this discounted cash flow model and these extremely optimistic, in my opinion, growth rates, you can obviously disagree with me. That's perfectly fine. In fact, if you disagree with me, I'd love to hear about it in the comment section. But I think these are pretty optimistic, and based on these growth rates, they're definitely trading below intrinsic value per share. So let me know in the comment section down below what you guys think of AMD. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.